We're talking about a company that's, well, not just growing, but really fundamentally transforming the renewable energy sector, setting what they call an unprecedented milestone in India's clean energy journey. So today, we're doing a deep dive into the Q1 FY26 financial results of Adani Green Energy Ltd. We've gone through their latest financial reports, their official press releases, investor presentations, basically trying to give you the clearest picture. Our mission here is to pull out the most important nuggets of knowledge from all this material, help you understand their performance, their strategic moves, and, what it all means for the bigger renewable energy picture, all without drowning you in data. We think we've found some pretty fascinating details, maybe some connections that might just shift how you think about what's actually possible in clean energy today. Okay, so let's kick things off. Their Q1 FY26 results. When you look at Adani Green Energy's performance this quarter, what's the immediate headline? How do these numbers stack up against, say, last year?
Well, what's truly striking, I think, is just the sheer magnitude of the growth. For Q1 fiscal 26, that's the quarter ending June 30th, 2025, their total income, it jumped significantly to 4,006 crores.
Right, 4,006 crores. That's what, over 40 billion rupees?
Exactly, and that's up from 3,112 crores in the same quarter last fiscal year. And maybe even more impressively, their profit for the period surged to 824 crores. Last year, it was 629 crores.
Okay.
So it's not just growth, it really feels like an accelerating financial trajectory.
Those are definitely robust financial figures. But, the real story I often find lies in the physical expansion that must be driving this. What does that accelerating physical footprint actually look like on the ground?
Yeah, that's a really critical question. Their operational renewable energy capacity. It grew an impressive 45% year over year.
45%?
Yes, reaching 15.8 gigawatts, that's GW, as of June 30th, 2025, up from 10.9 gigawatt just a year earlier. And what's particularly notable, I think, is the pace. Just this quarter alone, they added 1.6 GW of greenfield capacity.
Wow, 1.6 GW in 3 months.
Right, which contributed to a massive 4.9 GW increase over the whole past year. It really points to highly effective project execution.
That just sounds like an immense amount of new projects coming online. Where are these massive additions primarily located? Are they spread out or concentrated?
A significant portion, the bulk really, comes from new solar capacity, about 3,763 megawatts added across India. The lion's share, like you suspected, is concentrated. 2,463 megawatt came from Khavda in Gujarat.
Kavda again, okay.
Yeah, we'll definitely talk more about Khavda. But there were also contributions from Rajasthan, about 1,050 MW, and Andhra Pradesh, 250 MW. And beyond solar, they also operationalized, 585 MW of wind and 534 MW of solar wind hybrid capacity.
And those were also in Kavda?
All notably within the Khavda region, yes.
Okay. And what does all that added capacity translate into when it comes to actual energy sales? I mean, are they selling all this power effectively?
Well, the numbers suggest they are. Their energy sales soared by 42% year over year, reaching 10,479 million units.
10,000 million units.
Yeah, and to really put that in perspective, their energy sales in just this single quarter were more than their entire annual energy sales from only 3 years ago, back in FY22.
That's incredible. That's not just building capacity, it's integrating it and generating revenue incredibly fast.
Exactly. It really highlights a strong operational ramp-up, maybe outpacing industry norms in some ways.
So what's the management saying about this? How do they view their ability to sustain this kind of, well, frankly, breakneck growth trajectory?
The CEO, Ashish Khanna, he noted that these achievements are, and this is a quote, unmatched in India's transition toward clean energy. He emphasized that their investments in these strategically chosen resource-rich sites, like Khavda, are delivering superior operational performance and what they describe as industry-best EBITDA margins.
Right.
And the company seems pretty firm that they remain on track for that ambitious target, 50 GW of renewable capacity by 2030. Which, interestingly, now includes a significant strategic move into storage, at least 5 GW of hydro-pumped storage and battery storage.
Ah, stored. Okay. That suggests they're thinking about grid stability, too, not just raw generation.
Precisely. It's about managing intermittency, ensuring renewables can be integrated more reliably.
So beyond just building these massive plants, how efficient are they? The new ones, the existing ones? What does their operational excellence really look like on the ground, especially given this sheer scale?
Yeah, that's a key question, right? Because efficiency links directly to profitability.
Yeah.
Utilization, availability, these are critical. Adani Green reported some pretty impressive operational metrics.
Like what?
Well, their solar plants maintain an availability around 99.3%. Wind was about 95.5%, and hybrid at 98.6%, high uptime.
Okay, those sound strong.
And their capacity utilization factors, the CUFs, which
Yeah.
basically measure how much power they actually generate versus their theoretical maximum, were 28.0% for solar, a pretty high 42.3% for wind, and 43.9% for hybrid.
Maintaining those kinds of numbers across such a huge, rapidly expanding and diverse portfolio, that seems like a major challenge. What are the inherent risks, the complexities of that scale, and how are they actually managing it?
That's a really critical point. You
Really?
can't just scale up without sophisticated management. Their operations and maintenance, the O&M, seems heavily reliant on advanced tech to handle exactly those complexities.
Exactly.
They leverage sophisticated data analytics, enhanced by machine learning, artificial intelligence,
Hmm.
all run through their Central Energy Network Operations Center, or ENOC.
Here, see.
Right. This system allows for real-time monitoring across their entire fleet. The idea is it leads not only to higher plant availability, but also helps reduce O&M costs. And that directly feeds into that industry-leading EBITDA margin they mentioned, 92.8%.
Right.
It's about being proactive, not reactive.
And Kavda keeps coming up. The CEO mentioned it specifically. What is it about this particular location that makes it so pivotal to their whole strategy?
Kavda is, well, it's truly fascinating. Adani Green is developing what's planned to be the world's single largest renewable energy plant there.
The single largest.
Yes, targeting a staggering 30 GW capacity by 2029. Just to give you a sense of scale, the project area spans 538 square kilometers.
How big is that?
It's nearly 5 times the size of Paris.
Wow. 5 times Paris. I'm honestly trying to wrap my head around that. It makes you realize the sheer audacity, the logistics involved in these mega projects.
It really does. And they already have 5.6 GW operational there. They're deploying advanced tech like bifacial solar modules and capturing light from both sides, trackers that follow the sun. And India's largest wind turbine at 5.2 milliW Kavda is really a testbed for extreme scale and efficiency.
So with something that vast, particularly in what I assume is a pretty harsh environment, what kind of innovations are absolutely critical to just managing it day to day?
Absolutely. Well, one standout innovation, especially for a solar-heavy site likely in a dusty, arid region, is their deployment of waterless robotic cleaning.
Waterless cleaning.
Yes, across 8.8 kW of their solar capacity. They say it's India's largest such deployment, covering about 72% of their total solar seat.
And the benefit is?
Twofold, really. First, near-zero water usage for cleaning, which is a huge environmental plus. And second, they say it demonstrably increases electricity generation by keeping those panels consistently clean.
Makes sense. And how is all this generation, all this power matching up with their financial commitments, specifically those long-term power purchase agreements, the PPAs? Are they meeting their obligations?
The company states they've consistently generated electricity exceeding their overall annual commitments under those PPAs, which is key for their buyers.
Right.
In Q1 FY26, they reported they'd already met 31% of their annual PPA commitment, so strong progress there. And from a financial health angle, something else quite notable is their receivables days due.
Ah, how quickly they get paid.
Exactly. It stood at a very healthy 2 days as of June 2025, which indicates really excellent cash collection, very little delay.
Okay, so a company this size, growing this fast, it obviously needs a very robust financial strategy. What can you tell us about their overall financial health? And how are they actually funding this massive expansion?
Yeah, stepping back to look at that broader financial picture, their capital raising efforts are pretty significant.
Yeah.
In Q1 FY26, the company approved the conversion of over 40.6 million warrants.
Warrants, so those are like options to buy shares, right?
Essentially, yes. Instruments giving holders the right to buy shares later at a set price. This conversion brought in a total consideration of 6,024.40 crores.
Okay, big chunk of cash.
A very big chunk. And they state that in total, about 6,856 crores raised from warrants has been utilized mainly towards debt repayment, investing in debt of their own subsidiaries, and general corporate purposes. So it shows active capital management funding growth, but also managing debt.
So they're clearly pulling in significant funding through these warrants and other mechanisms. What does this signal about their overall financial stability and their ability to actually execute on those ambitious growth plans?
Well, management certainly indicates a well-funded growth path. They point to support from things like a U.S. $3.4 billion revolving construction facility.
That's like a flexible credit line for building.
Exactly. Plus, U.S. $1.2 billion in non-fund-based credit lines, and of course the capital raised from those warrants we just discussed. They also seem to be managing internal capital flows effectively. For example, the report mentions repaying 74 crores of unsecured perpetual debt and declaring 16 crores in distribution during the quarter. It suggests a, healthy financial circulation.
Okay, but with such rapid growth, sometimes there are unique financial hits or one-time items. Were there any exceptional impacts that affected profitability this quarter that listeners should be aware of?
Yes, that's a good point. The reports do mention some exceptional items that influence the bottom line. For instance, during Q1, the group wrote off about 17 crores in capital costs. This was related to projects in certain subsidiaries that they ultimately decided not to proceed with.
Okay, strategic write-off.
Seems so. And from a standalone perspective, there was also an impairment provision of 37 crores related to investments in subsidiaries. So yes, some one-off adjustments reflecting strategic decisions or revaluations.
Right. Now, while the operational and financial picture looks impressive, no deep dive is really complete without looking at the broader context scrutiny challenges. This brings us to their regulatory environment and corporate governance. Have there been any ongoing issues impacting their financial or operational picture?
This is definitely an important area for any large player, especially in a regulated sector like energy. The company has faced, and seems to be actively managing, several tariff disputes. These mostly stem from delays in project commissioning in the past.
Disputes over pricing due to delays.
Essentially, yes. But what's notable here, according to their reports, is that they've consistently received favorable orders in these disputes. For instance, the cumulative revenue they recognize from differential tariff rates tied to one dispute with the Uttar Pradesh Power Corporation UPPCL now stands at 111 crores.
So they're recovering money.
Yes, with 5 crores of that recognized just in this Q1 FY26. Another dispute saw them recognize 94 crores in differential tariff revenue related to past periods. So it highlights their ability, it seems, to navigate and ultimately resolve these kinds of regulatory challenges.
Okay, so they're actively recovering funds there. Has there been anything else drawing attention regarding their corporate governance? Something perhaps that listeners might have seen in broader news headlines.
Right. It's important, I think, to be really impartial here and stick strictly to what the source material says. The company did disclose that it became aware of an indictment by the U.S. Department of Justice and a separate civil complaint by the U.S. Securities and Exchange Commission
Okay.
against certain directors of the company. However, and this is explicitly stated in their filings, the holding company itself was not named as a defendant in either the indictment or the SEC's civil complaint.
So the company itself wasn't charged, but some individuals were.
That's what the filing states. Furthermore, it mentions an independent review conducted by law firms, which concluded back in FY25. That review apparently did not identify any non-compliances or irregularities for the company related to this specific matter. And importantly, they state those conclusions remained unchanged as of the end of this quarter, Q1 FY26.
Okay, understood. Important clarification there. Now, looking beyond just the financials and operations, Adani Green consistently emphasizes its commitment to sustainability, to ESG. What stood out to you in their Q1 report regarding their environmental, social, and governance initiatives, especially thinking about that bigger picture of global energy transition?
Yeah, if we connect this back to that global transition, their ESG performance is definitely presented as a significant highlight. For instance, Adani Green now ranks first globally in the FTSE Russell ESG score within the alternative electricity subsector.
First globally in their sector.
According to FTSE Russell, yes. They also received a highly commended projects title at the Reuters Global Energy Transition Awards 2025. And locally, achieved the highest ESG score in India's power sector, according to both NSE Sustainability Ratings and CRISIL ESG Ratings. These are, independent validations of their efforts.
Those are some serious accolades. Can you give us some tangible examples, though? What was their actual environmental impact this past quarter, according to their report?
Absolutely. So in Q1 FY26 alone, they report avoiding 7.6 million tons of CO2 emissions. They equate that impact to taking about 1.66 million cars off the road for a year. Their operational intensity metrics are also quite striking. They claim 99.9% less greenhouse gas emission intensity per unit of energy generated compared to the average for the Indian grid.
Almost zero emissions intensity relative to the grid average.
Effectively, yes. And similarly, 99.7% less freshwater consumption per unit generated compared to the statutory limit for thermal power plants. Plus, their entire operational portfolio is certified water positive, single-use plastic free, and zero waste to landfill. It paints a picture of a very comprehensive approach to environmental stewardship.
That certainly sounds comprehensive. So, pulling it all together, what does this signal for their long-term strategy and their outlook moving forward?
Well, they seem laser focused on that 50 gigabayu target by 2030. And as we touched on, this clearly involves strategic diversification into areas like hydro pump storage and battery storage, crucial for grid stability as renewables keep scaling up.
Right, the storage piece is key.
Definitely. They're also increasing focus on merchant sales, selling power directly to the market, serving commercial and industrial clients, C&I sector, and pursuing mid-duration hybrid opportunities. Their own investment rationale section highlights what they see as key strengths: secured resource-rich sites like Kavda, deep procurement relationships, strong execution capabilities, that tech-driven operational excellence we discussed, and robust grid evacuation infrastructure plus funding.
Okay.
So overall, it suggests a continued commitment to very high growth and profitability, but importantly with those ESG credentials seemingly embedded as a core part of their business model, not just an add-on.
So, wrapping this up, what does this all mean for you listening? We've taken a deep dive into Adani Green Energy's Q1 FY26 results. What we've seen is a company in a phase of really robust, even accelerating growth. It's fueled by aggressive capacity additions, especially at massive scale like Kavta, and backed by strong operational efficiency, seemingly driven by technology. They appear to be effectively navigating complex financial structuring and funding needs, while also managing regulatory hurdles and aiming for, well, top-tier ESG performance. They are, without doubt, establishing themselves as a truly major player in the global renewable energy landscape.
Indeed. It's quite a testament to how quickly this sector is evolving and the scale at which it's happening now.
Absolutely. So as you go about your day, maybe consider this provocative thought. When we look at companies like Adani Green Energy really pushing the boundaries of scale projects 5 times the size of Paris and pushing technological integration in renewables, what entirely new kinds of challenges might emerge? And maybe what entirely new opportunities could open up for the entire energy sector globally as they pursue this kind of ambitious, truly transformative growth?